All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm just updating the option prices here for Procter and Gamble and J.P. Morgan. 325 on J.P. Morgan, 240 on Procter and Gamble, which is where J.P. Morgan was this morning. Procter and Gamble has bled down a little bit. Now we entered the Procter and Gamble position at 126.21 as the stock price here. And the current stock price is 126.36. So, we've had the stock price go up for us by 15 cents, but we've now held it for 3 days, and the delta, or excuse me, the theta on the trade has, eroded the option down the $80 that we're down on it. So pretty classic in terms of just the movement there. We haven't seen anything very dramatic with it, just very much by the numbers. And then with J.P. Morgan, we're slightly up. Here is the stock price. We entered at 136.16. And J.P. Morgan's currently trading at 137.13. So it's one where the stock's up $1, but we're not up the full delta due to the theta here. We're not really in any sort of Vega risk here on them. Now I'm going to hold both of them into the weekend. And this is something you've seen me do before when the stock price, we hit our first time stop, and we're slightly down on the option, but the stock price has gone our way a little bit. I've opted to hold it there, and sometimes it's paid off, sometimes it hasn't. There's not any sort of overwhelming it's paid off or overwhelming it hasn't. The chart's still good, and the risk is still well quantified there. Maybe if we had done bigger positions on Procter and Gamble, I might look at it a little bit differently from a risk standpoint. But where it sits, there's no reason to pull it off. And then J.P. Morgan there, not don't need to worry about the time stop as we're green on the stock price and on the option price. So gonna hold both of them. There are no new signals on the board right now. If we come in and we pull up the crossovers, you can see FedEx, Juniper, Verizon. Juniper did not trigger. I thought it might have a chance, but it didn't. FedEx here, very interesting move on it today. Gapped on down, weakened, and really has popped on up here. This is one that is just showing a very solid bottoming pattern over the last 8 to 12 months. We've seen two very nasty earnings reports for FedEx here, and we have started to see UPS lag after their sour earnings report. Are we going to start to see a rotation out of UPS into FedEx? I think from a valuation standpoint, we can make that argument that we will be seeing that, and one where for FedEx to to pop back up, maybe not up to its new highs, isn't going to be all that, isn't going to be all that tough to see a trade up to 180. We're looking at a stock who's going from a negative earnings growth period to a positive earnings growth period this year if the numbers play out the way that they are projected. And that tends to be when we see stocks bottom. We talked about that concept with IBM, and IBM kind of had the same thing last year. There's just kind of nasty bottoming drudgery, but they just go into a period where their numbers, they don't have to be great to look really good. And, FedEx is going to be going into that. And so very nice move there on FedEx today, but not a signal there with that. Hopefully, we get a chance to play that if it pulls on back and then, gives us a nice little crossover. But as it sits now, there isn't. You can see all the downside crossovers, and these are pretty much the same that were on the list this morning. Caterpillar, Dollar General, EEM, General Motors, all of these on the downside list. I think all but General Motors has been on the upside list this week and hasn't triggered. So just not seeing not seeing triggers on these. A lot of them are kind of like this Halliburton right here, where you could make a pretty good argument of some downside action but the consolidation risk on them is very low, very high. And for most of these, basically what they're saying is the chance of a 2 ATR drop from this point is very slim, which I find to be interesting. I'm not sure that I agree with it, with all of them, but regardless of whether I agree or not, it's it is what it is. But we have Under Armour, which was an upside crossover this week, now downside crossover again. Just back and forth. So nothing really triggering there to go and get into. All right, so gonna hold on to Procter and Gamble, gonna go hold on to J.P. Morgan here, and take those into the weekend. As far as the market here today, it's oftentimes been said in the market you can learn more about the market on the pullbacks than you can on the upticks. And I think if we're looking at the market this week and what the market has been, and then looking at today's pullback, you look at the market pretty bullishly based on today's pullback. We have not seen an aggressive sell. We have seen, a sell that's, kind of targeted at more consumer names, with the, coronavirus, worries. Are those worries going to persist and continue? Is that going to be something the market has to deal with, still for a while? Yeah, it is. It most certainly is. And maybe one of the best arguments for the bears is that, hey, we have some sort of topping process, starting in developing, not starting, but developing here over the last 3 weeks. All right. But when we look at the weekly chart on the S&P and on a lot of the market indexes, very nice snapback, very bullish style snapback, and the style of a snapback that, does tend to see upside follow through. So, with the metric shifts that we have seen this week, with the, just some of the overall chart dynamics, it does bode well for the bulls going forward. Even though I know it's not super comfortable for a lot of bulls to go and buy. There's a lot of fear out there, and a lot of worry out there, but, that's the market, right? When is there not? There's always something to worry about, and that's perhaps the only absolute that exists out there in the market. Thanks for being with us here at Trader Minute. Have yourselves a fantastic weekend, and we'll talk to you on Monday. Take care.